I'm Charlotte McLeod with investingnews.com, and here today with me is John Ciampaglia, CEO of Sprott Asset Management. Thank you so much for being here. Great to have you.
Thank you for having me. Good to see you.
Really good to be catching up with you. We had a great conversation about gold a few months ago, but today we are going to hone in on uranium, which is one of our more usual topics. I wanted to start with the recent news from the Sprott Physical Uranium Trust. So there's the $200 million financing that was announced. It was upsized from $100 million and then closed, all in pretty rapid succession. So I wondered if we could start with that, maybe pick out the key details that you think investors should know.
Yeah, that's a great place to start because I think it kind of caught the market a little bit off guard. It's the first time we've ever done a bought deal financing, and it basically followed a non-broker private placement that we had done in mid-May, which was the first time we had used that technique to raise capital. And I think it was important to demonstrate to the marketplace that we have multiple levers that we can pull to raise capital for the vehicle. And people were a little bit frustrated that, we hadn't been able to raise any money for a number of months, given the negative sentiment that we've seen in the sector. And so, raising the 25 million in May and then the 200 in June was, I think, a really great sentiment boost to the sector. And, the whole transaction came together very quickly. It well exceeded our expectations, and I think it really demonstrates the continued institutional interest that we're seeing in uranium, because the deal was 100% institutionally placed. And as I said, it really came together in about 72 hours. So it well exceeded our target that we were aiming. And it really, I think, gives us fresh capital to put to work at a time when we believe the uranium price, after kind of languishing the last few months, represents a really good value.
I think that gives us a really good starting point in terms of what's going on. And you're right, it did move very quickly. It did seem to surprise people and inject that positive sentiment into the market. I know that prior to that happening, people were looking at the trust and wondering, okay, what is going on here? Are they going to have to sell uranium in order to raise money? And that's a topic that we've gone over before, but I wondered if you could maybe remind people, what are the circumstances we would have to see in order for something like that to happen?
Yeah, I mean, we were really mindful of this narrative in the market that Sprott was running out of cash in the uranium trust. I think we were down to about $8 million in May. And there was a group of hedge funds that were really playing on this narrative with this idea of, let's short the sector, because if Sprott has to sell uranium, it is going to send a very negative signal to the market. And we heard these stories from different people, and it was circulating around Wall Street. And we thought, this is a really silly idea. And that's when we really went to work on doing that first capital raise to kind of shore up the balance sheet and put that whole narrative to rest. I think what happened was people noticed what we had done, and it really kind of got the wheels turning amongst institutions saying, that's interesting. Wouldn't it be great to do a larger capital raise, not to shore up the balance sheet, but to go out and buy physical uranium, which at the time was around $68, $69 when we started the year, I think at 73. So the price had really done nothing all year, even though the fundamentals, have only improved. We were really struggling to find any negative fundamentals or market developments. And so I think a lot of these institutions said, well, where's the next catalyst coming from in uranium? And there always are catalysts. Some are predictable, some are not. And it really got us thinking about, well, why don't we just create our own catalyst? And I think that was really the genesis for doing the capital raise. In the last week or so, we've used part of the proceeds. We've purchased 950,000 pounds of uranium. We hadn't bought any uranium since last November, so it was kind of an interesting period of time to go into the market and get a sense for, what exactly is out there and available. So we have been able to pick up some pounds. And we obviously still have some cash to spend over the coming weeks. So it's clearly acted as a very positive catalyst. The spot price has popped. A lot of the equities have popped on this. And it's really acted as a nice shot of positive sentiment into the sector after being kind of down for a number of months.
Certainly it has. And that was a topic that I was curious to learn a little bit more about. So you have this 200 million and you're going to go out and buy uranium. So you've picked some up already. What does the rest of that process look like?
Yeah, well, it's not too different than, what we've been doing for almost 4 years. The trust is actually, coming up to its 4th year anniversary in July. So it's hard to believe. But, we basically go into the marketplace and survey different traders and some financial players to see what kind of uranium they might have available to sell to us in the spot market. And we do that very diligently and thoughtfully because it is a bit of an opaque market and it takes time to unearth these pounds and to see, where people are willing to sell them to us. So the spot price, a week or so ago was around $69 and change per pound. Right now it's sitting at around 78. So it's had a nice lift. But as I said, it's still only up about $5 on the year, even though we've had a lot of positive news flow. It's traditionally a quiet period in uranium during the summer months. A lot of people kind of take it off and utilities don't seem to be doing much. But we think it could be a much more active summer, not just with our buying, but a lot of pent-up demand is in the pipeline because utilities have just not been that active buying uranium for the last 12 months. They've been distracted by prices that, kind of jumped away from them and they thought they would come down, which they have not. Then they got distracted with, changes to the Inflation Reduction Act, which are starting to play out. Obviously, tariffs and trade wars and how that was going to affect the entire nuclear fuel supply chain. Some of those things are now behind us. Uranium is not getting bogged down with tariffs. And we would think that utilities need to start procuring uranium. As I said, they have not done much in the last 12 months. And one interesting stat to share with your audience is year to date, utilities have signed a grand total of 26 million pounds of purchases through long-term contracts. So these are contracts signed in 2025 for delivery many years in the future. That is about 1/3 the pace of annual replacement. So they are way behind the curve in terms of buying for future requirements. And that's why my earlier comment about a lot of pent-up demand is building. Typically in September, it kicks off the contracting cycle. There's a very large industry conference in London that the World Nuclear Association hosts. We will be there all week meeting with people. And it really brings all the different participants in one place. And a lot of the negotiations around these contracts kind of kicks off in earnest. So we would expect this September to December period and then continuing into next spring to be quite active.
Really interesting. I remember all the way back last fall, we were talking together about uranium and you mentioned the utilities at that point even still really needed to come back into the market. So we're still kind of waiting for that. Maybe we'll get some activity in the summer or into this fall. I'm wondering, you described a little bit of what is holding the utilities back. What could be the prompt that makes them come back into the market at this point, do you think?
Yeah, it's a great question. I mean, obviously utilities in the short term are well covered because it is not a just-in-time supply chain. They obviously spend years procuring uranium because it takes typically at least 2 years to convert it into end fuel. So they're always well covered at the reactor site and work in progress material as it's moving through that supply chain. But in the medium and long term, that's where their uncovered requirements start to become more meaningful. And that's really what they should be focused on. I think, in fairness to them, there was an enormous amount of uncertainty that they were dealing with over the last few months. And if you look at the prices of uranium and the prices of their related equities from about November when Trump won the election to the bottom, which was around the first week of April, it was basically straight down. And that was really, I think, everything from uncertainty around how the Trump administration was going to be dealing with nuclear. Everyone knew there were going to be changes to the Inflation Reduction Act. That's been put to bed. The production credits that the nuclear energy sector currently receives are going to remain in place. They are not remaining in place for wind and solar and other things like EV subsidies. So nuclear came out just clean on that in terms of, they did not get hit like some other sectors. And then on the tariffs, obviously there was a lot of uncertainty with all these wild tariffs on and off again. And I think, the U.S. Administration clearly acknowledged that why are we going to tariff something that we're completely dependent on other countries for, critical fuel. And so those were largely spared. So I think those big uncertainties are gone. And then in the last few weeks, we have, had 4 executive orders signed by President Trump that really deal holistically with the entire nuclear fuel supply chain. That is everything from encouraging more mining of uranium in the United States to building more capacity to process the uranium into fuel, to streamlining the regulatory permitting process at the NRC, to advancing new technologies around, next generation designs. And I think that was a pretty strong signal that the administration is not just, pro-nuclear, but really has kind of supersized what the Biden administration was trying to do, which was to kickstart the industry. And so I think all of these signals are really powerful and should enable the utilities to come back to market with confidence.
That's a great overview, and I think gives a good idea of what the utilities may be thinking. So thank you for going into that one. You talked about how the uranium spot price had a bump after the SPUT news, and you're mentioning the equities as well. So I wonder if we can hone in on what's going on with the uranium stocks at the moment. Where are you seeing activity, and where could there be opportunities there perhaps for investors right now?
Yeah, sure. That's a great pivot. So as I mentioned, like the uranium stocks, they went kind of straight down from Trump's presidential win until, early April. And they were obviously hit by the same, all those factors I mentioned about. And they were also, hurt, I think, by some hedge funds shorting some of the names in the space. So we saw very elevated short interest ratios, particularly on some of the Australian smaller producers, emerging producers. And it really seemed excessive to us that everybody was kind of piling on the short trade idea. And what you saw was, from Jan 1 to that first week of April, uranium stocks as a group were down about 30%. Again, fundamentals were largely unchanged, yet stocks were down 30%. People were very, very frustrated. And what you've seen since, I think April 7th was our low, which was just a few days after this, Liberation Day or whatever it was called, announcement about tariffs. You've seen the uranium stocks go up, I think, 11 consecutive weeks. And I think as a group, they're up around 60%. So we've had a very sharp V-shaped recovery as a lot of these risks and uncertainty have lifted. We've seen some short covering in some of these names, which has had, I think, a very strong effect on bouncing the performance of the stocks very quickly. And obviously, the Uranium Trust raising capital was also kind of a welcome boost to not just the spot price, but also a lot of the uranium stocks rallied on the back of this. So clearly, sentiment is turning more positive, and people are refocused on the fundamentals as opposed to all the noise and the uncertainty that was kind of overhanging the market for the last prior 4 or 5 months.
I'm curious about this shorting activity that we've been seeing. I've been hearing a lot about it in the last few months, and it's something, at least for me, that hasn't really come up before in terms of the uranium sector. So I'm wondering, have we seen it before and it maybe just wasn't as much discussed? Is it something that was happening even more in the recent past? And is it something that investors should take into account moving forward?
Yeah, I mean, these are cyclical and obviously volatile sectors, and some of the companies, especially as you go into the smaller cap spectrum of the universe, they're very volatile. But, it came to our attention when we were doing some calls with investors in Australia, and they mentioned to us that some of the most shorted stocks on the entire Australian stock exchange were uranium producers. And it really got us thinking about, what's happening there? Is that a company specific? Are those company specific reasons? Are they, just macro driven shorts? And there's a couple of companies there that 25 to 30% of the shares outstanding were short, and it really got our attention. And we've been monitoring it. And one example of a company there that had a 30% short interest a few weeks ago. The last I looked about a week ago, it was down to about 18%. So we've had some short covering there. And obviously we've had an improvement in sentiment that we just talked about. And that stock is up almost 100% over that period of time. So when these shorts come into the market, they can really do some damage on the names. But when they cover their positions, they can also, be squeezed, so to speak. And you see these very sharp V-shaped recoveries. So when we look at the basket of names that have been heavily shorted, they remain elevated relative to historical levels, but they're definitely moderating. So that's very positive. So yeah, people taking the opposite bet of a long investor definitely can have an impact on these stocks.
Absolutely. And a little bit more on the note of the companies and how they're doing right now. How is the supply demand balance shaping up in 2025? What are you seeing there? I know that, of course, companies are trying to get new mines online, get projects up and running, but of course, that is a slow process that can meet with headwinds.
Yeah, it's a great question. I mean, obviously, we see a steady, demand increase for uranium that's growing at probably 3 or 4% per year, after being essentially stagnant for a very long time. And that doesn't sound like a lot of growth, but when you think about an industry that's already dealing with a supply deficit, it starts to build on itself. And on the supply side, we're obviously getting many companies scrambling to ramp up production, restart old mines and the like. But it hasn't gone, bump free. There's definitely been some setbacks. There was a company just recently that, had to cancel some of their uranium contracts because their production, they were facing some production issues. So it hasn't been smooth. But I think the higher uranium pricing that we've seen in the last couple of years is obviously acting as a price signal to these producers to ramp up production. And, we're still at a point where some projects aren't quite there in terms of, having an acceptable rate of return based on current pricing. And we have seen some companies say, we're going to delay our project until we get a little bit more clarity on pricing and demand, because there hasn't been, as I mentioned, a lot of utility procurement the last 12 months. But the signals are there. And I think when the WNA puts out their biennial demand forecast, which they do every 2 years, and that'll be the first week of September, our guess is it's going to show a meaningful increase in uranium demand going out to 2050. And that acted as a very positive catalyst for the sector, like it did in September 2023. So that's one of the upcoming, industry developments that we're watching. But at the same time, the incumbent producers, they're still practicing supply discipline, which is another way of saying they don't want to flood the market with too much supply because they want to support the price. And you can't blame them for doing that, because for many, many years, they really, really struggled with incredibly low prices. And now that the demand signals are there, they clearly just, they do not want to give away their very valuable uranium. So there's been very good supply discipline, and the term price has held incredibly steady over the last 12 months, even though the spot price has been much more volatile. So I think the term price has been resilient. We still don't have a lot of uranium purchasing by utilities globally, ex-China, and we think that's to come.
Great points there as well. And you mentioned another topic I wanted to bring up to you, which is the spot price versus the term price. So we've talked pretty extensively about the spot price, and that is tending to be what people watch because it's more easily accessible. But I think people also know that those term prices make up most of the market and could be even more important. So there's been a divergence there. Do you see them coming closer back together, or what are you anticipating?
Yeah, it's a really great question. So the term price is published once a month. So we just, we don't have a high frequency of signal there. And that's the basis by which, producers and utilities sign these longer term supply arrangements. And spot price is a daily price, and it's a much smaller market. But coincidentally, about the same amount of pounds have traded in the spot market so far in 2025 as contracts signed in 2025. So that's kind of unusual. And there have been times where the spot price has been way ahead of the term price because it reacts faster. And we obviously saw a huge dislocation in, early 2024 when the spot price was around 100 and change, and the term price was still kind of catching up in the 70s. And then, in this past few months, we saw a dislocation on the reverse where the spot price got as low as $63 and the term price held steady at 80. And our belief was that just wasn't sustainable, given we're in a market situation where we have a structural supply deficit. It doesn't make any sense to us. And obviously, as sentiment has turned since the bottoms in April, we now see spot at 78 and term at 80. So they're almost touching again. And that to us seems like more, fair value between the two. Spot could easily pop ahead of that depending on, market developments. But our first, thought in this market environment was that there's no way those things should be, 10 or 15 or $17 apart. At a minimum, they should be very close. And we've achieved that after a few months of improvement on the spot market.
Right. So coming back into balance there. Good to go over that one as well. I want to throw in another current events question. And I don't know how much time we need to spend on it, but I thought I would throw it out there for you to take a look at. I'm wondering if the uranium sector has seen any negative impressions or sentiment regarding what's going on in the Middle East right now, because we had the US attacks focused on those nuclear facilities. And I think at this point, probably the public knows the difference between nuclear weapons and that kind of thing and nuclear power. But what have you been seeing? What conversations have you been having?
Yeah, it's a great question. And I mean, the one bear case question I always get is, what could really derail this bull market? And our answer is always, a large scale accident at a nuclear facility could change public sentiment and obviously energy policy. I'm relieved that, given all of the fighting in Ukraine around a few nuclear power stations and obviously the actions that the US has taken against those facilities in Iran in the last few days has not really shaken people's confidence. And I think, as you pointed out, they've been able to distinguish between the two, issues. And in Iran, obviously, the goal there that was the issue was around enrichment to, military grade uranium, not civilian use, which is very, very different. And so the market seems to have taken it all in stride. We obviously don't have any, radioactive incidents there. So the market seems quite calm against this backdrop of a lot of hostilities.
That's really good to hear. And I think it does speak to maybe changing attitudes toward nuclear. Those are the topics that I wanted to go through with you today. But before I let you go, are there any final thoughts you would leave investors with on uranium? There's definitely a lot going on right now.
Yeah, I mean, I guess I would say that, after a 4 or 5 month period of kind of malaise in the sector, really bogged down by uncertainty as opposed to bad news. And I always say that uncertainty is way worse than bad news because you can't price uncertainty. that it's lifting. We definitely are seeing an improvement in sentiment. We're seeing an improvement, obviously, in capital flows into the sector. There's a lot of excitement kind of returning, given some of the big announcements we're hearing from around the world. We are coming into a seasonally strong period, starting in August, September for uranium. So I think investors were very frustrated, as we were, from November to April, May. But we definitely seem to be turning the corner. The trend is to the upside. So that's what I would leave you with. It's obviously a very volatile sector. So, what happens is you can get kind of washed out during these downdrafts. And it's quite self-defeating when you sell at a low. So you have to kind of have conviction and ride it out and try to dollar cost average and buy tactically when you can. But it definitely feels like sentiment is improved and things are moving back up.
I've been feeling that way too. So it's good to have you confirm that. And I think it's a nice way to wrap up for today. So thank you so much for coming on to go over what's happening in uranium. This was great.
Thanks for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is John Ciampaglia with Sprott Asset Management.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.